Hello entrepreneurs, welcome to Compliance and Growth Sessions with myself, Tim Musieli. I am the CEO of TMMPS, a verified world-class African-owned consulting firm. Loss before taxation means your operating expenses were more than your gross profit. It's possible that it can happen, but I'll just focus on the profit, and then I'll explain again what happens if your company made a loss. Because one thing that I've realized with small and medium-sized businesses is that anytime they go on a loss, what they do is that they don't declare. It's just just submit nil returns. And actually it's working to their disadvantage because you are able to claim the loss from SARS. So it carries forward, right? So let's just start with profit, and then we'll come to the loss. Just remove the loss. So when you made a profit, right? So I'll just use numbers, just random numbers. So let's say you made 200,000 on gross profit. 200,000 rand. Because I'm in South Africa, I use rand. In South Africa, we use rand. So you make 200,000 rand, and then your operating expenses is 100,000. It's 100,000 rand. So now if your gross profit is 200,000 rand, and your OPEX, which is the operating expenses, is 100,000. You stand to make calculate 100. So you make a profit before taxation of 100,000, right? So if you make a profit before taxation of 100,000, now you have to calculate the 28% of this. So just to sound smart, I know it's 28,000 whilst you're working on the calculator. It's 28,000. So here we'll say taxation. We'll put a line item of taxation. So I'll just put a line item of taxation. Remember, in South Africa, it's 28%. You'll check what's the tax rate in your country. 28% of 100,000. You can do the calculation. It's actually 28,000 rand. So on 28,000 rand, and then we'll say what's the net profit. So the 28,000, remember, this is the money that you have to pay to SARS on corporate income tax. So I explained turnover tax, I explained small business corporation tax. So this is corporate income tax when you use the 28%. So in this case, you have to pay 28,000 rand to SARS, right? So you can just do the calculation. 20 minus 100, it's 80, and then 80 minus 8, that's 72K. I hope I'm not mistaken. So now your net profit will be 72K. This net profit, you carry this you carry it to your statement of changes in equity. It's either going to be your retained earnings or retained loss if you made a loss. So you carry it forward, and then your accountant will do calculations for you. So this 72, this is the one that you carry to retained earnings. What happens then when you made a loss? Same procedure. So I'll just remove the profits. Yeah, so let me also remove the numbers. Yeah, when you make a loss, the tax percentage remains the same, doesn't change, it's 28%. But on gross profit, I'll just use the numbers on gross profit. I'll still use the 200K. Right? That's your gross profit, 200K. So for you to make a loss, obviously, because you don't have finance, remember, no finance cost. I know some people might want to sound smart and say, oh, but what if there's finance cost? We are not basing it on finance cost. So now we say our operating expenses, let's say our operating expenses were 300K, right? So if our operating expenses were 300K and our gross profit was 200K, that means we make a loss before taxation of how much? 100K. I've also put it in brackets so that you can understand that it's a loss. So you make a loss of 100K. What you do here, you don't go to SARS and declare nil returns. You declare that you made a loss. 28% of that loss is carried forward. So what's the 28% of the 100K? That's 28K. That's the loss that they're going to carry it forward. So already you know this tax loss before taxation is 100K. So also your net loss will also be the same. So now don't just submit nil returns. Make sure that you submit and you declare a loss, right? So this is CIT, corporate income tax. If you have questions regarding this, you can comment on the video. If you have questions regarding this, you can send us an email on info@tmmbs.co.za and we can work around it. Or also, if you have a question regarding this, you can also ask your business advisor or your consultant. They'll explain everything to you. Remember, if you make a loss, make sure that you declare the loss. You don't pay, you declare the loss, because if you don't declare the loss, you stand a chance of losing the 28% of that loss being carried forward. I'm just going to make an example why I'm emphasizing this one. Let me just wipe off. So remember, we had 28K, right? This was what we would stand a chance to claim. So what's going to happen is that if this is in 2018, right? This is the loss that you're supposed to claim, the tax on the loss that you're supposed to claim, right? 28K, and then we say 2019, you owe SARS. Please mind my handwriting, I'm a numbers guy. So we owe now SARS, you owe SARS 50K in 2019. In 2018, you had the opportunity to claim this 28K from SARS. What happens is that you just say the 50K that you owe them, which is the 50K that you owe them now because you made a profit, minus the 28K that you're supposed to claim. So we can do the numbers. It's 30, so it's gonna be what? Get the 30 there. It's gonna be 22,000. I don't have a calculator. I hope I'm right. So we're gonna have 22K. This one now it's payable for 2019. 2019 payable. Payable. So don't forget. This was the 28K that you were supposed to, you claimed on the loss in 2018. This is the 50K now that you owe to SARS in 2019. So you take the 50K that you owe to SARS, which is payable, you minus the 28K which SARS owes you, and then you get 22K, which is 22,000. This is the payable for 2019 now. So you can see how this loss has saved you a lot of money. So basically, this loss has saved you 28,000 Rand. So make sure the next time you claim that loss.